Welcome to the Galileo Capital monthly update. It's the first one for 2025. Full disclosure, we're recording a couple of days before the end of December, just to get ahead of the festive season and the scheduling difficulties we'll have when everyone's on holiday. So unfortunately, no guests today. It's just me. I think maybe just to kind of talk through some of what's going to happen in the year ahead, some of the things we're thinking about, and maybe some of the consequences of 2024 that will play out through 2025, and then one or two little admin issues that we think you should take note of for the year ahead. So firstly, we've spoken about this quite a lot through last year about the big elections that happened right around the world, and just as a reminder, more than 7 billion people around the world were affected by national elections in their home countries, and that means the very vast majority of the world voted. And in summary, when we look back at the results of those elections, it was clear that the incumbent parties, the ruling parties of the time, were severely punished by their voters. It wasn't always the case that the voters removed the party in power. What might have happened was that they lost a large proportion of their support. In some cases, the ruling party was removed and a replacement party was found. And as we've noted in the past, it wasn't always just that the left, the left-leaning parties won or the right-leaning parties won. It was very much a case of the incumbents were kicked out. So if the incumbents were left-leaning, then they were punished, and either they remained in power with the reduced majority, or the right-leaning powers were brought into play. So I know we've gone through our national election, and we feel that it was unique to the ANC that they lost majority for the first time. It's worth noting that's not unique. That actually a lot of parties had a reduced majority or changed power. I think what's really worth remarking on is the big impact that these changes have had on those countries. So, for example, we're seeing France really struggling to put a government together. They're in a state of fiscal deadlock at the time of recording, which means that they can't approve a budget, and there is a real chance that they run out of money without actually approving new budgets. And in one of the very largest democracies in the world, that's really worth noting how an old and in theory mature democracy is unable to cope with a change of government and with the state of play being in real flux for them. We've also come through kind of an aborted, feels like a coup in South Korea, where the president of South Korea decided, it seems like unilaterally, to declare a state of martial law, simply because he couldn't get his parliament to agree on a budget either. And at the time I'm recording this, he has been impeached. Impeachment in South Korea is a little bit different to what we would see in South Africa or in the US, because it still requires their Supreme Court to agree with that impeachment. And there is some debate as to whether their Supreme Court is fully constituted, because they've got a limited number of judges on the bench, and they've been waiting for new judges to be appointed. So again, a fairly mature democracy, certainly older than South Africa's, and one that caught us all by surprise, has gone through severe political disruption. And I think we see that all the way through. In South America, we're seeing Brazil, watching their currency and economy and I guess bond and stock markets all imploding as their government is kind of oscillating around their promises for fiscal consolidation, and then pushback from the populace wanting more spending to take care of social needs. So what we're seeing is just real flux in right across the world. The conflicts in the Middle East and in the Ukraine have not been resolved, and those will continue to dominate headlines for as long as they're in play. And then we've got America with Donald Trump having announced most of his big picks for leadership. What we wait for now is for him to take power in the next sort of 4 to 6 weeks. and then place his cabinet in play, and then start to implement his policies. Already we're seeing a little bit of change from the election promises, which is 100% what we forecast. As a reminder, what we forecast is that Donald Trump will do three things in his term. One, he will deliver on some of his promises exactly as promised. Two, he will do the exact opposite of what he promised, and not speak about the promises that were broken. And three, that he will deliver on some of his promises in a minor way and then claim major victory. And we don't know which of those promises will be kept and broken, etc. But already the delivery is happening in that he is now negotiating around tariffs and discussing what will and won't be done. And I think it's classic Donald Trump, to try and unsettle the world and then ask for 100 and actually end up landing on 20 and be happy with a 20 and crow about that as a great victory. The cost of that strategy is massive unsettling of world markets and political systems, and that's a cost he's very happy for the rest of the world to pay. So it's something we'll continue to watch. What we will say is we're not going to dramatically change our views and our big kind of global strategic investment allocations based on what Trump says from one day to the next. We might change policy or our investment policy when we see real policy implemented in the US. And if we think that it has a major change on our investment outlook, then we will implement. But certainly not on what he says on his social media platforms or even in a news broadcast. We will look at actual policy, and just to highlight, America is a still a functioning democracy with numerous checks and balances in play. So what Donald Trump says he wants to do and what he might try and enact through executive orders will need to be checked through their two houses of their democratic institutions, and those might be a real kind of check on him and what he would like to get done. So we'll watch that, sometimes with amusement, sometimes with dismay, but certainly not trying to anticipate what will happen. I think we need to respond to real policy before we make changes, if any. Having said that, much of our investment structures at the moment, both in South Africa and globally, are focused on large diversification, both in terms of asset type, so across cash, bonds, property, and shares, and then geography, because we think that the world is going to be very volatile for some time to come. And we're not convinced that we know which of the global economies will deliver great results in the next year or two. What we do know is that proper diversification will allow us to benefit from those that are doing well, and then to limit our losses on those that surprise us on the downside. And I think what happened in South Korea is a very good example of a surprise on the downside. There was nobody anywhere in the world, including South Korea, that anticipated their president trying to call martial law and then having that reversed 6 hours later. And so we think that kind of volatility is here to stay for some time. And the only way to deal with that is proper diversification. I think it's worth noting that we are nearly through 12 months of no load shedding. And I want to keep reminding people of that because that was something when we were having conversations with our clients that they could not foresee a situation where South Africa would get out of load shedding so quickly and on such a sustained basis. There were lots of kind of conspiracy theories that government was spending an enormous amount on diesel generators at the time of election, and that we would be back in very deep, dark stages of load shedding thereafter. And to those of you that were predicting that with very high degrees of certainty, I need to remind you that those predictions were wrong, and certainly predictions about the failure of the government of national unity are there, and our view is so far it's going okay. I think at the moment what the political parties need to get used to is similar to people that have been in a long-term marriage where one is a Protestant and one is a Catholic. you've got irreconcilable differences on philosophy and dogma, but you need to get along and find a way to make things work. And I think that that's where those political parties are now, is that they're finding ways to make things work, even though they might have fundamentally different views about how socialist or market orientated they are. And certainly we are hopeful that government will find ways to resolve their big issues, the government of national unity, and if they can't, that they will park them until such time as they get resolved. And I think then, just looking at some of the big things that we're looking at for the year ahead, we are looking at Transnet and hoping to see some resolution around those logistical logjams, making sure that the rail network starts to work, that the ports start to work more efficiently, and we would hope to see some signs of that towards the end of 2025. So certainly in the beginning of the year, we don't see scope for major turnaround there, but we should start to see that somewhat later in the year. If that happens again, that will be an impediment to growth that will be removed, and we're hopeful that continues. In terms of some administration issues that we would ask you to consider, remember that the tax year ends at the end of February. So if you have retirement fund contributions that you need to make to take advantage of the tax breaks that we are still offered by SARS for making contributions to retirement funds, we would suggest that you consider that now and make sure that you get those done, at the latest by kind of 15th to 20th of February, to make sure that you get the tax breaks of your retirement fund contributions. And similarly, if you do plan to do donations to charities and you would like to get those donation certificates, we suggest that you consider doing that in the month of January or very early February, just to make sure that you get your tax certificates in time for the end of the tax year. And then just lastly, we'd like to thank you for your patience over the last few years. Stock markets were incredibly volatile through COVID, and then an immediate bounce after COVID, and then another drop once interest rates started to rise all around the world. And we think that cycle of interest rate decline that we started to see late in 2023 and through 2024 will continue around the world in 2025. That should be very positive for stock markets. It's one of the things that you can give a lot of weight to when you're making your investment decisions. But we're not sure how the political and sort of economic disruptions will affect the stock markets through the year ahead. We are concerned about valuations of some of the tech shares in the US, and the thing about valuations is that they can remain high for years and not necessarily fall over in a month or two. So we will continue to watch those valuations. We'll continue to exercise proper diversification so that we maintain some exposure to the American tech sector, but making sure that we have exposure to other cheaper markets, both in the US and around the world, because we think valuations do matter when you make investment decisions. Most likely that if markets stay high in 2025, we'll be careful to phase in new money to investment markets around the world, although we do think the JSE is offering very good value still, and should be very rewarding to investors in the months and years ahead, if interest rates continue to decline and investors look for growth in emerging markets away from the US and potentially Europe. I think that's enough for our January update. We wish you all the best for the year ahead. We would urge you not to get too disrupted by political noise. We think that's going to be a factor right around the world for the year ahead. And then we look forward to some good, consistent growth if we see interest rates declining right around the world. Thank you very much, and we look forward to chatting to you again in February.